Good evening. Today is Friday, May 7th. We had quite an interesting day in the markets as payroll report this morning was a huge miss and a huge disappointment. We added just 266,000 jobs when the expectations were about 1 million. And what's even more interesting is that only 2 of the 79 forecasts were even below 800. So it was so outside, like 3 standard deviations outside of the expected norm. And so it highlights to me the difficulty of how difficult those predictions are to be made. And on top of this, even if you predict them correctly, you still have to predict the reaction correctly. So it's an interesting thing, those predictions are, but S&P 500 ran up 35 points on these numbers and then pretty much traded in a 15-point range for the rest of the day. And the volatility also was crushed. Since the 4180 number that I was looking at was broken, the market was pretty much moving to the upside and we had a 50-point run. And of course, Victor was right yet again yesterday in our conversation when he said that after yesterday's reversal move, he expected more of an upside continuation for the jobs report.
Yeah, there aren't a lot of quadruple tops, right? There's
Right.
what he was saying, I believe. Yeah, and we saw it really punch through this level that had been kind of a recurring, that 4,200, right above 4,200, where it didn't seem to be able to make it through, and we really punched through. So,
right. I'm sure also Victor would say that it was a very woke day, because for a few examples, the White House press secretary basically admitted that Biden is not supposed to answer any non-vetted questions from the press, not prepared questions. And so, you know, it reminds me more and more of the former Soviet Union. It's all staged like Pravda. And on top of this, Biden said that the lower job growth, which is conveniently came in lower, much lower than expected, is now going to help him with his boondoggle infrastructure plan, a very woke plan indeed, which Victor highlighted many times. And so now Biden said we need that massive infrastructure more than ever. And so job numbers conveniently disappoint. And Yellen also said that she doesn't think those employment benefits are hurting hiring and hurting any numbers, even though people are clearly saying, and we also discussed it yesterday, which is kind of self-evident and obvious. It's amazing that somebody could even disagree with that, that if you pay people not to work, they would stay home and not work. It's amazing how controversial the subject really is. Even obviously the US Chamber of Commerce said that paying people not to work is killing the recovery, but what does he know, right? He's only the president of Chamber of Commerce. He only talks to real people on the ground. And of course, Yellen also said yet again that inflation is transitory, as lumber is now at 1,700. I don't even know how many days in a row. And gold also had a very nice week and looks increasingly bullish. And all of the commodities are basically continuing their transitory charge up and making new highs, and they go moving higher and higher, the commodities index, for the 5th straight week. And spot commodity index is up 65% year over year, which is a record spike. So however transitory it is or it isn't, it certainly is there right now. Copper, for example, hit a new record high this week. Also steel, and now it's up. The copper is now up 90% year over year.
Yeah, and we're seeing some interesting, really strong rallies in cyclical plays like U.S. Steel or Alcoa, where they're very close to or at new highs as a result of this. And it's really, it kind of goes back to 2017. I haven't seen rallies in these since that time, when we then we kind of blew up in 2018, and these really came well off their highs in 2018, but 2017 was a strong rally year for all of these.
Right, and now with the infrastructure plan, that's also going to obviously increase the demand for all of that commodities. So, and US dollar is not helping, given that it had another very large down day. US dollar index had a large down day today, also contributing to the commodity spikes. And what was also interesting today, the bonds, they had a really wild roller coaster day. And I'm not a bonds expert, but they clearly spiked, the bond prices spiked on the jobs report, only to sell off and close negative for the day.
Yeah, we saw this kind of failed rally today, but they're still off their highs of a few weeks ago. And if we go, let's see, this looks like daily chart actually, but just a moment, let me get the intraday here. It rallied a bit this morning, but then I couldn't. Bounced around and we were well off the highs and actually had a close down for the day.
So that's a red day, ended up on Victor's charts. It's a red day, which I think has somewhat of a bullish implication.
Exactly, right. They're moving opposite stocks. We're seeing up day on stocks and down day, big reversal on the bonds. But the what's interesting also to look at is some of the other global indices, like, for example, you look at the DAX. I mean, these are all saying the same thing as what we're seeing in the US market, that the DAX, FTSE, Nikkei. Nikkei is still a little bit off its high of a month or so ago, but even like emerging markets, that they're close to the highs now, right now, from about a year ago. So it's pretty interesting to see these types of rallies that we've not had in 4 years, really. And is the economy growing at a pace that would justify it? That's a question. We've got this reflation going on, but that's not the same as economic growth.
Well, for now, after this terrible jobs report, the market is happy that there will be no tapering or tightening or anything from the Fed anytime soon. At least that's what the market expects. On the other hand, the Fed may be caught between a rock and a hard place if the inflation is not going to be transitory and it continues. So now the question is, now that we have crossed 4,200 and closed above it, what is next for S&P 500? Do you have your levels there?
Yes. So let me go back to that. I hope. Yeah, I think the levels here. Yeah, really the key level for ES was around this. It was this sort of volatility trigger level, about 4180 or so, and 4182 is what it was today, and we punched through that, which is saying that it's the trend is bullish, that the options trades, or the big trades that are on ES and on SPX, are tilted bullish as a result of this move, and so we should expect more upside. And so we kind of closed at one of these levels where there's a lot of combo trades put on, but that's not unusual at all. But it's will likely continue this kind of creep up unless there's something to change.
Right, maybe with a little back and forth action. And what was surprising to me also today, that Tesla hasn't really moved at all. Given that Elon Musk is going to be on SNL, I was expecting at least some excitement going into it. And what happened to Dogecoin today is, again, Elon Musk was sending some mixed messages saying that Dogecoin could be the coin of the future, but don't buy it or something like that. He's
I'm less convinced on that. I mean, it's I kind of regard it as a trading sardine, as the joke goes, but it is it's near an all-time high. So we can't argue with the market action, but it's what it is. But it's probably my own view is that something like Bitcoin it's been consolidating for nearly about 3 weeks, nearly 4 weeks now, and that it hit a new high on April 12th or 13th, and since that time, it's just been it had a big pullback, and then it's just been consolidating since that time, and so we've had this big, broad consolidative movement here since really March, and I think that's bullish for Bitcoin. I think what the tendency is in the market is that you have the capital flowing into Bitcoin, and then it distributes into so-called altcoins or other crypto, and we've seen that. But I think that some of the tide will come back toward Bitcoin over the next several weeks. It might take a few more days for that to work out, but I see the next big move in Bitcoin. But in addition to ones like Dogecoin, we've seen some others really move recently, like some of the, let's call them second tier coins, like Cardano made a new high today. Avalanche. I mean, these are like second tier. They're not in the top tier below Bitcoin. Or like Ethereum, but they're sort of would be competitors to Ethereum, and they have some strong communities that can justify growth on and development on those platforms. Like Cosmos is another one, and made a new high today, but pulled back off its high. So all of these are really moving. Polkadot is another one. All of these are really moving a lot, and this is close to a high, but it's not quite at its high, unlike some of the others. So I think it'll be interesting to see what happens with Dogecoin. I think it's more likely to correspond to a top than it is. Yeah, well, the thing that's different about crypto that might it sort of changes the dynamics a bit is that it trades 24/7. There's never it's not like Friday end of day, you've got this rush into the market that then corrects on Monday, like you often see in stock market.
That's one of the things I hate most about crypto, is that there is never a day off. You could just never sleep in peace, It's
right. Even Christmas. I mean, even the Forex market closes on Christmas and New Year's or whatever, but not a crypto. So it's really it could change the dynamics a little. I'm not going to say can't keep going up. It's probably not. It probably doesn't have the same upside as something like Bitcoin or some of these others that have been consolidating a bit and building a base for if they're going to make a next move up. But I think the tide, the same thing that's pushing up commodities right now and stocks, is pushing up crypto. So I don't sort of the tailwinds are very strong for cryptocurrency.
Well, it's ironic because Musk said that crypto should be considered speculation at this point. Don't go too far on crypto speculation front. And he also said that because Dogecoin was invented as a joke, there could be an argument made that it's the future currency, because that would be the most ironic outcome. So everything.
Well, who was saying that it's all speculative?
Elon Musk was saying that.
Oh yeah. Well, but here's the thing: is on something like some of these, like Ethereum or Polkadot, where there's a lot of development going on, that what the developers there are trying to build is an entire alternate financial system where you can lend money, you can make money on your loans, you can borrow money. There's a whole financial system that's being built in a decentralized way, and so it's not just a speculative vehicle. It's that you're kind of participating in the building and the use of this new financial system, that you can get better returns. You can get a lot better returns on, say, dollar-based assets on something like Ethereum or Binance Smart Chain, some of these others, and that's what a lot of the enthusiasm is at least for these, is that people are wanting to participate in that and move some of their money that they get, whatever, 0.5% a year in a money market in a traditional financial institution, but they can get 9 or 10% very easily in some of these decentralized finance platforms. So that's part of what's driving Ethereum. It's not just they're speculating on the price of Ethereum. It's that Ethereum lets them use that system. You can even take Bitcoin and tokenize it and put it on the Ethereum chain and lend it and make money from your Bitcoin.
I think this becomes like this algebra and second derivatives. People can hardly comprehend the first derivatives. Now we're going to the second. And I think that is the major hurdle for adoption of crypto, just the sheer complexity and abstraction level that's required for people to comprehend that.
Well, I think those tools are coming. And so for example, there's a wallet called Darma, which you can get on the App Store, Apple App Store. And if you download this app, then it'll help you set up, it'll handle all this, and it'll be just like using an app. And you don't have to know the address. You don't have to like set up MetaMask on your computer or do any of this stuff. And you don't even have to worry about, you can even deposit money directly from your regular bank account onto and buy Ethereum with it and then use it there. So it handles all of the complexity, and it makes it just, like any other app. And so I think that apps like Darma are really the future for that. They make it, there will always be like the power users, the people that want to get in and really like gearheads working on cars or something.
Right.
But there will be, most people just want to drive a car to get from one place to another. And that's what an app like Darma is. It's like that ordinary car, not the gearhead vehicle,
Right. And I think that would be the next major step, the infrastructure around crypto that makes it, like you said, a little more user-friendly, where you don't need to know, but can just use it.
Right? I think that something like a Darma, when that came out, it came out just a couple of weeks ago. And I got it just to see what it was like. And it's not, it's not really what, it's not, I've used all the tools that I've already used, but I really like it because I think it could make it very easy for adoption for people that are less technical to use it without even being really aware that they're using cryptocurrency at all. And so I've recommended that to a number of people. I don't have any stake in it or anything. I just like the app. I think it's a good app. So.
Sounds good. And also, I guess we promised our viewers to talk about biotech. You have mentioned before that the sector in general has been kind of damaged a lot during the recent couple of months, and that some stuff looks really appealing. Let's look at those charts. And
sure. So I think that one of the things that has really killed, there's two things that have killed biotech. There's the risk that has always existed. Let's see if I can, here we go. Biotech. I like looking at this one. This isn't necessarily the best ETF to trade it or best index, because it's very heavily weighted towards some big caps. And often when people say biotech, they're not necessarily thinking of Amgen and Biogen and so on, even though those are biotechs. And depending on who you talk to, it could even be some so-called big pharma are actually biotechs, but depending on what their portfolio looks like Genentech. But they this is off its high that set back in February. Like, what's interesting is that even though this was sort of a back in February, near the beginning of February, like I think it was 6th of February, was the top in a lot of momentum stocks, biotech, tech, and so on. And so if you look at like some of the investment funds like ARK, which I'll bring that up, which is people are probably familiar with ARK Investments. It's like Kathy Wood's fund, and she's got a number of different funds, but this is probably the most speculative one that's in like disruptive tech and even things like Coinbase and so on. But it topped out right about the same time, like about February 6th. And so these are sort of the momentum stocks, not just FANG, but the ones that are maybe 2 or 3 tiers down, a little bit more speculative, that have really been that we're really running up in from the low in March, right up into February, maybe with a few pullbacks, but we've had a real extended pullback since that time. But I think that if we go back to biotech, it's a very similar story with it. That it's and I think that I don't know. I think that we might be coming to an end of this risk-off trade, and biotech's been hit a lot harder than that ETF. But we might be coming to the end of that risk-off trade and seeing a little bit more some more positive movement here, and there will be some biotechs that I think will respond to that well. And so on Monday we can talk through some specific names, because one of the key issues and why this topped out right around this time is that there's a lot of the Biden administration is really putting price pressure on all pharma and biotech is especially sensitive to that because their products tend to be high priced. They tend to be $30,000, $40,000 for a course of treatment, and if they push down that price, biotech can't recover their investment that they needed, and they're not profitable. Even if they partner with a big pharma company or they sell off their assets, that sort of thing. So it's so that's what there's this perception of risk. But I think that even though the Biden administration is not going to be positive for biotech, I do think that it's maybe not as bad as some people fear, because they put Janet Woodcock forward as the FDA commissioner. I think she's on the verge of being confirmed for that. She was Obama's commissioner, and she was very friendly to pharma and biotech. And saying, as someone in the industry or someone who's worked in the industry for years, I would say that's not always a good thing for patients. I mean, because but she's very friendly to the industry, and I think the stocks will respond because the FDA will be more of a approval machine than we saw even under the Trump administration, where they were trying to really move products through to approval. So I think that'll it'll reverse some of this negative trend. But if you look at one like IBB, which is another ETF that people tend to trade, and this the NASDAQ Biotech Index, then that one's not been quite so negative. This one is more heavily weighted to the bigger cap ones, and where there's less risk, like an Amgen. The other one is a bit more speculative. So these are, but I think so. I think the case is similar. It topped out right about the same time, and we may see more of a recovery, a quicker recovery in this one, an IBB, than we see an XBI. but I still think that the whole sector could recover pretty well over the summer. And we can talk about some specific names that have the, let's say, more pricing power, less price risk, and that they could really, they've got an interesting product mix, and they could really perform well if we see a general rally in biotech.
Right. And well, I'm glad we have you here, because to me, biotech is kind of similar to crypto. There are lots of little crypto plays and lots of little biotech companies. And unless you really understand their products, there is no way to tell. And you probably need a degree in biochemical engineering or something to really understand what is this company, biotech company, is really producing, and is there a future there? And maybe even with having a degree, you really don't know, because you are not privy to their internal research. So I'm glad we have you, who's going to help us figure that out, because for me, it's just a wild west of like a million small companies, each claiming that my research is going to be revolutionary and cure everything. And
we could talk through two different strategies that that a lot of biotech investors use, and one is where you're buying success. I mean, you're sort of momentum to the upside. We see a little bit less of that. There are fewer of these trades than there were because of this price risk, and then also there have been some very prominent blow-ups. And when I say blow-up, what that means in biotech is where a company like Bluebird, they announced some data that one of their patients had some negative, had developed cancer, actually, one of the patients that was on the therapy. But what they pretty much showed, though, is that the cancer was unrelated to the therapy. And this gene therapy stock, but they took a hit back here. They first took a hit for earnings back in January, or sorry, November, and then took a big hit in February. And not surprisingly, that was as things were sliding already, but it hasn't really recovered since then. So that's the other strategy, is to buy the broken stocks, and you're betting on a recovery. And so it's a little riskier, because if they've had a blow up, well, maybe they have another blow up, and often these things come in series. So we can talk about the ones where it might have been overdone, and Bluebird might be one. There are a couple of things I want to check about it before pointing it as one, but it's a very good company. It's just I need to look at the dates of their submissions. They're upcoming, and that could determine a lot of how fast they recover.
Sounds good. Thank you. Meanwhile, we also have COVID cases falling in all of the 30 states, and one third of Americans are fully vaccinated. So that should hopefully contribute to reopening and hopefully finally mask removals.
Yeah, we're seeing some pretty good rallies here from February in stocks like Pfizer, where not maybe huge rallies, but they're just under 40 for Pfizer, and that's a huge company. So we've seen some pretty nice moves also in maybe J&J's had a little bit less performance. They've got a more diverse portfolio. This is a very small piece, but it's still it's not just pharma and J&J, but they still very close to a year-old high, for example, here.
And it seems like the vaccine controversy and pause didn't hurt the stock much at all.
Right, that's a risk with this one.
Right, but didn't hurt the stock at all. It seems like it's almost at the new highs.
Well, what the issue is it ordinarily would really hurt a stock, but because of this emergency use declaration, none of these have been approved yet. And Pfizer just today, both Pfizer and its partner applied for FDA approval finally, and it was just today. So it would be the first one that's approved, but when they're under this emergency use declaration, it more or less frees them of any liability. And that's so if you have some sort of negative response to the drug or the vaccine, then you don't really have a legal recourse. You have to sue the government for making a bad decision on that.
Which is great for Pfizer and other vaccine manufacturers, because for them, it's a free, very large scale trial, free of risk.
Right. That's right. And typically, vaccine trials are huge anyway. I mean, they like Pfizer did a trial that was about 100,000 patients, which in pharma, that's really big, just because of the risks and so on from vaccines. And so vaccine trials tend to be really big, but this is the biggest by far trial that any vaccine makers ever done. One other piece of news that I actually just saw before we joined is on Ethereum, and I know I'm switching the topic a little bit, but there was a company, Van Eck, that has quite a few ETFs, and they just applied for an Ethereum ETF just this evening. And so it'll be interesting. There's currently no either Bitcoin or Ethereum or any other crypto ETF. There are ones that are, let's call them like closed-end funds that they trade on the market, like Grayscale, these Grayscale funds, but they can trade at a discount or premium. They're not, there's not a mechanism for pegging them back to the underlying value, and unlike an ETF where you can, if you've got a big enough position, you can arbitrage this back to its value.
Why would the Grayscale funds trade at a discount and or premium? And sometimes I read that it's a very large discount. Why would that be? That makes
well, okay, so it's a couple things that that a lot of people they invested. Okay, so either people or institutions originally invested in the Grayscale funds, which had something like a $25,000 minimum. So it tended to be for people that had a little bit more money, and or institutions, and but they had a 1-year lockup, and at the end of that 1 year, they could get the shares that trade on OTC, and you could trade it at your broker basically. But so let me look at like the Grayscale Biotech one, or Bitcoin one. So yeah, GBTC, and then there's an Ethereum one as well, and a few others. But this one, it does follow Bitcoin pretty closely, but it's trading at a small discount right now. And are not that small. It looks like more like a 8-10% discount actually. But the reason for that is that people bought this directly from Grayscale as and invested in it. They got a lockup for 1 year, and then they get the shares. They can get the shares at the end of the year, and so they're unloading now because they're below the. I mean, they're profitable, but because they bought a year ago, very profitable, but they were probably planning on being able to sell at a premium. But they didn't get that. They're not get that premium. They'll get whatever they can get. The other thing is that if there is an ETF, then this becomes kind of useless, because why would you buy a something that it could trade at a discount, trade at a premium, unpredictable, and versus buying an ETF that's going to be pegged. And the other thing that it's sort of at the whim of this Grayscale company that they've been buying the shares of this to sort of prop it up, but it's sort of like a company doing a buyback that there's no guarantee that's going to continue. Why would you count on it? So people are one in ETF. So I think that some of the discount is due to anticipation of an ETF launching. And since what we've seen over the last week is one, the CME launched micro Bitcoin futures. That doesn't really affect like an ETF because ETF is going to use regular futures, full size, but still it's like 5 Bitcoin in one of those futures contracts, which is a lot. You need, and there's something like 50% margin. So you need to put down like $170,000 margin just to trade this. So not many people can trade it. Even like a ETF company would have trouble trading it because they can't calibrate their position sizes that well and hedge as well. But with the launch of the micro Bitcoin futures and now their Ethereum futures, I think we'll see an ETF pretty soon. But this Grayscale fund is actually one of the larger holders of Bitcoin. They have like a couple 100,000 Bitcoin. So it's not insignificant. They'll probably try to convert to an ETF at some point. They actually have tried to in the past, but they've not been successful.
Thank you, Andy. And I guess we'll be back next week with more biotech ideas.
Okay, thanks. Have a good weekend, everyone.